We are going to have perhaps the glass half full conversation. Take a look at what the future holds in store, and what if the nation were to put its fiscal house in order. And I've got three great panelists, three familiar faces to anyone here in Washington, three people I've talked to a lot on Bloomberg television over the years. First of all, to my left, Sheila Bair, who of course ran the FDIC during the financial crisis. She's a former chairman of the CFTC as well, a veteran of the Treasury Department, also Capitol Hill, and now a member of the private sector, serving on a few boards, and also a senior advisor at the Pew Charitable Trusts, and a noted author as well. Sheila, welcome. Glad you could be here. Erskine Bowles, who we all know too well on this issue because of his efforts on behalf of the president with the Deficit Commission, along with his partner in crime, still in witness protection, Alan Simpson, as I recall, the two of them still providing warnings across the country about the risk to the economy if this country does not get a grip on its fiscal issues. And Erskine, as always, it's a pleasure to have you here. And we have John Engler as well, who, as the head of the Business Roundtable, represents the CEOs of really America's biggest corporations. And I should also note, not one, not two, three terms as governor of the state of Michigan. And Chris Christie can't even claim that. So a political and business perspective as well from John Engler. So appreciate all of you being here. And Erskine, I'm going to pick on you first, because you are so associated with this issue. There is a little bit of a lull in the action here in Washington with regard to the fiscal wars. We've got a little bit of a truce at the moment. Are you any more optimistic, given the current truce, that this country and this city is prepared to get a grip on this issue and move forward? Are you more optimistic today than you were, say, even a year or so ago?
Thank you, Peter, and thanks to the Peterson organization for putting this on, because I think we continually have to educate people and build up trust, I think, as everybody has said today. I tell you what I'm concerned about. I'm concerned that people will take some of this lull in the action, take some of this drop in the deficit as a harbinger for the future, when any economic analysis tells you that's not the case. I remain concerned that at some point in time, if we don't put the ultra-partisanship aside and get the members of both parties to pull together rather than apart, that the markets will wake up and they'll look at us and the markets will say, you have a dysfunctional government, you're addicted to debt, that there's no question that over any long-term period, the fiscal path you're on is not sustainable, and you have no plan whatsoever to deal with it. Nothing. Zero. And to make matters worse, every couple of months you go through one of these debt default crises where you put the full faith and credit of your country in jeopardy. You know, I see more risk, and I want more money for my money. And I think they'll look at what's been done over the last 4 years since we came out with our report, and they'll say, look, you guys did the easy stuff. You know, you put a cap on discretionary spending, and you raise taxes on people who make more than $400,000 a year. And whether you think it's good or bad, it's not politically that hard since there are not that many of us. And you've done the stupid stuff, and I believe it doesn't get any stupider than the sequester. There's not a business here that cuts their spending by making across-the-board cuts. You go into your budgets and you make those cuts, you know, surgically, where they have the least adverse effect on productivity. But we continue to avoid doing the tough stuff. And that's what every single person, whether they come from the left or the right, has talked about today. We have to reform the tax code in order to be more globally competitive, and we have to do it on a basis that increases revenue, whether that happens dynamically or it happens by raising revenue on a static basis. Two, we have to slow the growth of the entitlements. We have to bend the healthcare cost curve. Anybody that thinks healthcare is going to stay down is crazy when you look at the demographics and the aging of the population. And three, you got to make Social Security sustainably solvent. Am I worried? I know for sure that the highway trust fund's going busted this year. I know that disability trust fund's going busted in 2017. I know the Medicare trust fund is in 2026, and Social Security is in 2033. So am I more optimistic? No, I'm more concerned, and that's why I want to make sure when we have a lull here and a chance to influence people that we don't quit working, and hopefully sometime in 2017 we can actually get something positive to happen.
So now, Governor Engler, that the glass is officially half empty again, I would like your take on where we stand, what you're hearing from the CEOs you represent, and whether or not this, again, lull in the action, truce, if you want to call it, has this, you see what's going on in the stock market, people talking about perhaps some traction in the economy. Has this at least provided some ammunition to suggest that a longer-term deal would produce even more prosperity for America in the future?
Well, I think there's plenty of evidence that a long-term deal would produce great benefits for the American economy and for the families of America. I mean, we have an economy today that is in the midst of a very slow, I guess steady, but 0.1 first quarter growth doesn't impress me very much. We maybe 2.5, 2.4 GDP growth this year. I'd like to see that be 4.5, 4.4. And so the CEOs of the Business Roundtable believe that the U.S. ought to be leading a global recovery. And we believe that there are a series of policy decisions that could be made that would be enormously helpful. Long-term fiscal stability is very, very important. But on the path, if you want to have a path to get there, tax reform's right there. We're seeing the importance of tax reform given some of the international M&A speculation, announcements, plans, whatever you want to call them. And frankly, you're seeing it in some of the completed deals that have been done where there's been acquisition by U.S. companies of other companies where they end up with the tax home not being the United States.
Do you think this whole inversion trend is going to spark not just a debate, but action?
Well, it should. I mean, we should have as a national policy the desirability of having foreign earnings come back home to the U.S. to be available for investment here, for dividends here, if nothing else. But why keep that money offshore? And that's what is happening. And certainly, why keep it offshore with then the incentive to be to purchase additional assets or make additional investments elsewhere in the world, which then, if the R&D center is there, pretty soon there's a manufacturing facility or there's something else. So, I mean, the policy is simply wrong-headed. We ought to change that. And everybody else in the world has changed. President Clinton actually made a pretty good point. And I would certainly, on behalf of the Roundtable, accept his offer today. Let's do the business tax reform first. Let's get that fixed. Let's get this economy more competitive on that basis before we move on to some other areas. Immigration reform.
What about the current president's offer of doing it but investing that money in infrastructure?
Well, it's not quite, there's really not quite an offer. It's amusing, I think. I'd call it amusing.
He's at the Tappan Zee Bridge this afternoon talking about it.
Well, we'll see what he says today. But there's definitely a path forward on this. Dave Camp laid out something that I thought was courageous and really tried to approach in a broad way with a constrained approach, because he took a current law policy approach to it, which made him make some very tough decisions. I think we could do a little better than that. I think there's a way, and I'm an optimist, I think there's potential for growth, capitalizing on the energy opportunity this nation's found itself with. That's tremendous. Immigration reform, we know, that's one I am thinking is going to get done this year. I'm still an optimist on that. We've got trade conversations going on around the world. Those need to be completed. The Congress needs to give the president fast-track authority. There's a number of things that all are on a growth agenda which relate to our topic today, our economic future. These would all enhance our future and would all, I would believe, set the stage for some of the resolution of what I actually don't think they're that hard, some of these decisions. Social Security, it's a pretty straightforward, kind of obvious set of choices we've got. And we ought to just make them. And I don't think anybody's going to lose their job over that. I think they'll be applauded when it gets done.
Sheila, I think we have a glass maybe half full again with Governor Engler over there. Where are you in all this, particularly from your perch, as you watch the financial crisis, which of course added to the fiscal woes of the country? Your thoughts about where we stand and the risks that another financial crisis could only make this worse?
So I'm probably more half empty than half full. Consistent with my last name, I keep seeing negatives instead of positives, but it keeps you out of trouble when you're looking around the corner. I do worry that we are still too much trying to use an economic model we used prior to the crisis that we know now is unsustainable. One that's characterized heavily by Fed interventions in the markets, making credit very cheap, encouraging people to borrow. That's why you have low interest rates, to encourage households and businesses to borrow. The Fed cannot create real economic demand. They can only supply money. And so when you put money into the system and there's insufficient economic demand, it goes into speculation. And so we have had a lot of increase in valuations of both the bond and stock market. I tend to think both are overvalued. I think there is a risk of a correlated correction in both markets. Hopefully that'll happen over time as the Fed tapers and ends quantitative easing and eventually normalizes interest rates. So I hope, I've been a big critic of monetary policy for many years now. I hope they can get out in a way that's not disruptive to our economy. But I do think when we get there, it will help the real economy, because I think there are too many CEOs now looking at their share price, their valuations, and thinking, is that me or is that, the Fed? And how much of this is me? And they're looking at very moribund top-line growth and, what's going to be the growth engine independent of monetary policy. But I think we need to find out where the real economy is, absent this kind of artificial stimulus, and build from that baseline. We need fiscal policy. I'm still mad we didn't do Bowles-Simpson, but we didn't. And but there are things: fundamental tax reform, corporate tax reform. Everybody who's been thoughtful about this agrees. We need to lower the top rate. We need to broaden the base. The effective rate was in the low 20s. The top rate's 39.5. Only the dummies who can't hire the lobbyists pay that. But you can make it. We need to be. That would make our corporate system much more competitive. There are other distortions in the tax code that really lead to harmful behaviors. I mean, you're seeing it now in this low interest rate environment. You've got a lot of corporations issuing debt to pay dividends and stock buybacks. So they're taking on more leverage to goose their share price. And of course, interest on debt is deductible. Dividend payments are not. So there again, it's another incentive for increased leverage into the system created by a tax code, both the frank corporate and personal tax codes that create incentives for some very harmful behaviors. So I think that the way forward, fundamental tax reform, broaden the base, get the top rates down. I do it both with the personal and the corporate rate. Immigration reform, we lead with our heart, not our heads. I have compassion for families, and I want them, but to have that drive your immigration policy when people with PhDs who can come to this country and contribute and make a lot of jobs are going to Vancouver, that makes no sense whatsoever. We haven't talked much about education, but look, we're under a serious competitive challenge with the globalization of the world economy. And we're not going to compete with Bangladesh on labor costs, but there are other things we can do. There are strengths that a developed economy should bring to the table that we're letting erode, like infrastructure. We've got resources to have a good infrastructure, and how many people, labor unions and business, agree on this? We can produce jobs, good-paying jobs, high-skilled jobs, and we need it. We need that infrastructure. We need to get smarter and educated workforce. Should be another advantage of a developed economy. We can compete on that basis, but there again, we keep debating how much we're spending on education as opposed to how. We don't get good results, but some better bipartisan focus on getting more bang for the buck, having better, especially at the post-secondary level, targeting financial assistance, or at least creating incentives for kids to get degrees that will get them jobs. Where there is a demand for jobs, I think would be really crucial. So there are paths forward that can make us our economy more competitive, that can revive our middle class, which I'm very worried about right now. But again, right now we're still just relying on cheap money from the Fed. We celebrate when they can even pass a budget. Erskine and I have been around. I worked in the Senate in the 80s. That used to be routine, and now it's a big victory when you can get that.
We've been operating the largest economy in the world on a month-to-month basis. No business does that. No not-for-profit does it. That's crazy. And you talk about a territorial system. Mm-hmm. We live in a knowledge-based global economy. We're not out here on an island all by ourselves. And it makes me sick to see a Pfizer think about going to the UK to pay lower taxes. We have to have a competitive tax rate. And all the people that talk about, well, gosh, if these terrible corporations, get a chance to bring that $1 trillion to $1.5 trillion back to the U.S., all they'll do is use it to pay dividends and to buy back stock. I say, great. At least that money's circulating here, creating jobs over here rather than being stuck in some foreign country accelerating there.
Let me just pick up on that if I could, and do you agree with President Clinton that instead of we should pursue corporate tax reform first, because it looks like the whole comprehensive solution is just too difficult at this point?
I think it's almost impossible to do one without the other.
Politically, right.
People think it's much easier to do the corporate tax reform. There are lots of tax expenditures, lots of spending in the tax code, lots of disincentives and incentives there that you feel like you could wipe out and reduce the rate and broaden the base and actually create more revenue. But to do it and not do the individual tax code when you get to subchapter S corporations, partnerships, proprietorships, it's really difficult.
Yeah, I draw the line. I don't disagree with that. We always talk about business tax reform, which is sort of that middle bucket. I think you can do business tax reform, which is based on individual rates without getting into individual rates. And there is an important distinction there, because in that middle bucket is all the pass-throughs, the partnerships, sub-S, all these different kinds of arrangements. There's even about 200 entities that are bigger than $2 billion in annual revenue. You could make an argument they ought to be over in the corporate tax code. But in '86, last time, quarter century ago, there was a whole lot of movement away from corporate to this sort of middle bucket. That ought to be done. The way that people need to understand and be able to explain this to people who don't understand it, and there are plenty who seemingly don't get it, we accept in this country massive competition among states. Much has been made recently of the Toyota jobs moving from California to Texas. And Texas is bragging about them. California said, well, we didn't really lose them. I mean, they did, but they're trying to explain that away. But we understand. The state of New York's, crowing about how you can come there free, no corporate tax rate if you locate there. This competition has been murderous among the states. Well, guess what? In the world we have today of the 21st century, nations are competing like that, except one, ours. We've chosen not to get into that competition. And you can say, well, that's a principled stand. But then be prepared for Ireland with a 12.5% rate, or Canada with a 15% rate, or somebody else to really come after some of your pride and joys.
Erskine, you mentioned, in terms of the timing here, when this might get addressed again, you mentioned 2017.
Just a lucky guess.
Just a lucky guess. You really think there's no opportunity between now and then?
My best guess is that nothing substantive will happen before 2017. I think you can see some things at the margin. I'd love to see a lot of the things that John mentioned, whether it's immigration or it's something done, that really did fix the Highway Trust Fund without blowing a hole in the budget. I'd like to see those kinds of things done. I'd love to see, I've seen a dock fix that really, wasn't paid for with a bunch of gimmicks, but really substituted paying for quality, not quantity, and had some of the recommendations that we had in our report. But I can't see any tough political decisions candidly being made between now and 2017. I hope I'm wrong, but...
Sheila, do you agree with that? You're a veteran of politics in this town.
Well, I hope. I still want this administration, this Congress, or the next Congress to succeed. I think there are ways that President Obama can salvage this. It requires leadership. It requires knowing how to use power, and it requires not just talking a good game, but actually, meeting with members of Congress, finding out what they want, doing that, unsavory give and take that goes along with the legislative process. But that's how you get things done. So I'm hoping that he will have an incentive, and I think everybody's getting fed up too. I think this idea that the Republicans point to the Democrats point to the Republicans. It's all their responsibility, and to heck with all of them if they can't do a better job. And I think that's the message increasingly that they're going to be hearing from their voters.
I think Sheila's point's a really important one. I think the public is sort of pox on everybody's house. The Christie formulation he articulated at noon is an interesting one. The Senate switches in November, and you do have then sort of a crystallizing. You got Republican-led Congress, a Democrat in the White House. is there in that last 2 years a desire to say, all right, look, let's meet in the middle of the road on a bunch of this stuff. Let's clear some of this stuff. That's one way. You see governors doing it both ways. I mean, you've got, I think Missouri's got a Democrat governor, Republican legislature. Obviously, Christie's the opposite. So you see different permutations at the state level. It does work there. Not to suggest ever that what happens at the state should be a roadmap for Washington. But Christie laid out one window that could open, and it could be interesting. If it stays the same as it's been, I think you know, the 2016 planning for 2017 should get on in earnest.
Erskine Bowles, you served on the President's Deficit Commission. Do you think this president would like, as one of his legacies, some sort of grand bargain or something close to it?
Yeah, I think he's always hoped for a grand bargain. It's just tough to make it happen. It takes, you know, it takes a lot of give and take on both sides to make it happen. I do think the American people are ahead of the politicians on this. As President Clinton said, I have talked to a bunch of people over the last 2 years, along with my pal Al Simpson. And without any exception, people want us to put this ultra-partisanship aside and make the tough decisions. I also read an interesting economic report flying in here today. It was put out by the Miller Center at UVA. And basically, they ask a question of a random sample of American people. Who do you hold most responsible for the lack of good, high-wage paying jobs in this country? And an overwhelming 69% of the people answered, it's those politicians in Washington who won't work together. I think they really are tired of this ultra-confrontation, and they want to see some principled compromise. And as my pal Al Simpson says, if you can't compromise without compromising your principles, you better never get in business, you better never be a legislator, and for God's sake, never get married.
Let me follow up on something you also said earlier, Erskine. I want to get Sheila's take on this. The timing here. When will the markets finally start to raise these questions? We're in a low interest rate environment right now, but we all know that's going to change. Janet Yellen's told us it's going to change eventually. At what point are the markets going to start to penalize the United States for the position it's in? Because we don't see it right now. And to some extent, America's still the best opportunity out there for a lot of investors. We see that at Bloomberg in our most recent poll.
Well, you know, I think Erskine has said, tell me if I'm misquoting you, that we're the best-looking horse in the glue factory. It might have been a private meeting who said that, but sorry I outed you. But it is true that the lack of alternatives is really what keeps us going. And it's so bad that when we, you know, when our Congress irresponsibly goes to the absolute cliff in terms of whether they're going to raise the debt limit and threaten default, that Treasury spreads go down because people are still receiving Treasuries as safety, even when we're the ones that are creating the instability. But, you know, this can't last forever, and I think the world is getting fed up with us. And the Europeans might love for someday for the euro to be the reserve currency. I think the Chinese would love someday for their currency to be the reserve currency, or at least seek alternatives to the United States. So we can't, this isn't going to last forever. We also, you know, I think the Wall Street, and I'm disappointed to some extent, I think they're still thinking too much that the Fed's going to take care of all of us, so they'll just keep, you know, feeding the deficits and buying the debt if necessary. But, you know, that model never works. It's amazing that we've gotten away with it as long as we have. But when you have your central bank start financing your government, it always leads to hyperinflation. Eventually, those chickens will come home to roost. So I think getting lethargic about, complacent about the Fed being able to control all this, if we start seeing weakening confidence in U.S. debt, is not wise. But the good news is, I think it's still several years off before another currency could be a viable alternative to the U.S. So we still have time. This isn't going to last forever. And if things keep deteriorating the way they have, pretty soon we're really going to find ourselves in the soup.
I want to incorporate a question that we got from the audience to our conversation here. Can we agree that infrastructure is a win-win and will help make the economy more vibrant? Governor Engler, I got a pretty good guess. I know your answer to this, so I'll let you pick up first.
I totally believe that. I think there's a lot of work. We've got deferred maintenance everywhere we look, and we've got a lot of work to do. And I'm not one who, I think of challenges to, there's a lot of infrastructure where I think there's a business case and ROI to be made for going forward, and there's going to be public-private partnerships. My new favorite one is listening to David Rubenstein yesterday talking about or Monday when he was talking about the Washington Monument, on budget, on time. Small project, but there are those kinds of opportunities, and we've got them with ports, with water transport, with air traffic control system, and on and on. The hard one are roads and bridges, because they are the beneficiaries are a little hard to track down and get them to pay up.
They all cost money, as we know, and there are big debates about adding to the deficit at this particular moment in time to pay for it.
Well, all of them except roads and bridges, I think, actually have an ROI. I think if you make an investment in our ports, you're going to use that for a long time. If you start improving locks and dams on the Mississippi, you're going to use that for a long time. Our problem is that the stuff we built in the 1800s is starting to fail. So maybe in the 21st century, we can start to fix that up a little bit. But I think there's a tremendous amount of work that can be done. I think there's some creative ways to do this. What we've got is a problem, though, and then I'll throw one other, energy, just to throw one that's a completely private sector, but I think it's a type of infrastructure, if you will. You talk to the American Chemistry Council, they've got $100 billion plus in projects that have been announced that are directly as a result of what I'd call downstream investments from the available gas supply that this nation has. Now, in some cases, it takes longer to permit them than it does to build them. We ought to be able to do something about that. When the bridge collapsed in Minnesota, we got busy and figured out how to get that permit done immediately and get the bridge built pretty quickly. And we can do that. We ought to have, I think, an economic emergency declared, since we've got so many million people that have left the workforce, so many other millions that are unemployed, and so many other millions that are in part-time jobs. So let's speed up the permitting, and let's get the agencies cooperating. And I think that is hopefully what the president's going to be talking about today. There's some, at least in the advanced text, what he's going to be saying today is we're going to cooperate. We federal agencies are going to cooperate more, move these things along faster. So that's a piece of it. I think the financing piece is pretty easy. There are some where it's hard to get the capital needs to be paid back, and that is roads and bridges, as I said, it's hard to get the beneficiaries to belly up on that.
Let me just say, I'm 100% for investing in infrastructure. I'm 100% for investing in education, research, energy, but you got to pay for it. Yeah. And unless we reform the tax code to make us more globally competitive, to create additional revenues, unless we slow the rate of growth of these entitlement programs, we're not going to have the resources. Let me just give you one mathematical example. And I'm for making those investments because I think in large part that's the way you do something about this real inequality. Every piece of data you look at says if you invest in education, if a kid's born in the bottom fifth, if they get a college degree, they've got a 3 times better chance of getting to the top fifth. So there are lots of good reasons, but it's going to be hard unless we make the tough decisions. Making the decision to invest in infrastructure is easy. But if you look at the data that just came out from CBO, they looked at 1974, 2014, that 40-year period, and 2024, and they took just interest on the debt, health care spending, and Social Security. In 1984, those amounted to, 1974, those amounted to 6% of GDP. Last year, they were 11% of GDP. By 2024, they'll be 15% of GDP. And during that same time period, revenue has averaged 17.4% of GDP. That means you've got to cover the Army, the Navy, the Marine Corps, Homeland Security, education, infrastructure, research, all at 2.4% of GDP, when it's averaged between 9 and 12% of GDP forever. You can't do it. So we've got to make the tough decision. It can't just be, do we want to invest in
this political environment with our remaining time left, how do you get people from both parties to sit down at that table, Sheila Bair, and have that conversation?
And I think, everybody gives a little bit, and maybe tax reform could include a revenue-raising component. By broadening the base, you can still lower the top rates. By broadening the base, you can pick up extra revenue. I think I agree with John. A lot of the infrastructure, I think, can pay for itself, whether it's through tolls or dedicated tax revenues or whatever. It takes courage to do that, but you can. I think there are ways that a lot of this can pay for itself over time. And with, again, with interest rates as low as they are, we should be issuing 40-year debt to pay for it.
Yeah, and having done it twice, you know, I negotiated a balanced budget between Gingrich and President Clinton, and I headed up this committee with Al. You have to do two things for sure, and both take time. One is to educate people so they understand the facts, and two is build up trust. And a lot of people talked about that today. But if you don't do those two things, you got no chance to get
There's some people suggest you also need a crisis environment to get that kind of solution here in Washington. Do you buy that?
Well, I think we've got one.
I
think we've got one. So I say let's get at it. I do think the trust, it's been mentioned, is very important. The other thing is there's going to have to be also the kind of governmental reform. I'll give you one example. A lock that's really important up on the Mississippi, announced by the Corps of Engineers in '88 they were going to do it, have it done by 2000. The new completion date is 2020, and the cost has gone from X to about 4 to 5X. You cannot, because, and President Clinton mentioned this about capital budget, we don't have a process. Some of that stuff needs to be done and reformed in the way we do that so we can get at this. No state and no company would make the decisions the way the federal government manages this. And that is a contributor to sort of this malaise that we feel about, you know, getting infrastructure underway. So.
All right, I want to wrap up with one question to each of you quickly. We've got we're at the Fiscal Summit again, year 5. How many more fiscal summits are we going to have until this is solved? Governor Engler, I'll start with you.
Well, probably about 15 more before it's solved. But I mean, really, the leadership matters. They do have to work on the trust. Everybody said that today. You've had people here, but we got to be doing more than celebrating a little minor agreement between Murray and Ryan. We got to have the big deal. It's got to get done. It's for the next generations.
The big deal, Erskine Bowles, past 2017.
Let's hope none. Let's hope we get it done. Let's hope these guys put the partisanship aside, pull together rather than apart, and make the tough decisions. I think if we put pressure on them, they will.
Sheila, Bair, you get the final word.
I'll go one more. 5 years.
All right. Sheila, Erskine, Governor Engler, thanks to all three of you for being part of this and for sharing your thoughts, and thank you all for being here. And I know the program's going to continue with a lot more in just a moment, so stick with us here at the Fiscal Summit.